Good morning, trading floor. I did not sleep. CPI drops at 8:30 this morning and everything changes. Welcome to session 39. I'm Wildcard. The referee is about to blow the whistle. You've got artificial intelligence CapEx on one side of the scale, the biggest capital spending cycle in tech history. Oil over $100 on the other. Mines in the straight, inflation pipeline lighting up, yields creeping. CPI at 8:30 decides which market we're in. Oil first. Brent crude peaked near $120 yesterday before pulling back on this peace plan being brokered through Pakistan. Witkoff and Kushner are the envoys. Iran says they'll reopen the Strait of Hormuz if the blockade ends and the war ends. Trump's own assessment of the ceasefire odds, 1%. He said that publicly. 1%. That is not a negotiation. That is a press release. And here's the part nobody's talking about enough. There are 12 mines sitting at the bottom of the Strait of Hormuz right now. 12. They have been laying there since March. A handshake deal doesn't clear those in a week. 6 months minimum of mine sweeping operations before shipping returns to anything resembling normal. Oil doesn't snap back to $70 on a tweet when there are 12 live mines in the water. The physical reality doesn't care about the press conference. Nacho was calling this oil snap weeks ago. We are inside the window. The thesis is playing out.
Quick one before we get to the numbers. Nothing we say on this show is financial advice. We're two guys reading the tape and sharing what we see. Do your own research before you put real money behind any of this.
All right, TV. CPI. 8:30 this morning. Give me the setup.
Consensus is 3.4% year over year. Prior month was 3.3, 1/10 of a point above prior. But here's the framing correction. Don't read today's print as the whole story. The oil move from $70 to over $100. That pipeline bomb only partially lands in April data.
Say more.
May and June CPI is where the full weight of this oil move actually lands. Even an inline 3.4 today doesn't kill the inflation argument when oil is where it is. Today matters. The next 2 months matter more.
So a clean number today could be false comfort.
Potentially. And the yield math makes that matter even more. The 10-year Treasury is sitting at 4.41% right now.
What does 4.41 actually do to growth stocks at these valuations?
At a 45 times forward price to earnings multiple, your expected return over Treasuries is basically zero. You're taking equity risk. Earnings miss, management exposure, the whole stack. For the same return as a government bond with no risk attached. Past 4.5% on the 10-year, the math inverts. Portfolio managers shift out of the Qs and into bonds. That is not a crash call. That is a rotation trade.
So the binary is clean. Cool print. Yields stay in check. The artificial intelligence bull case gets another green light. Hot print. We're testing 4.5 on the 10-year fast.
The math is that clean. One good number and we're off. One bad number and the repricing starts immediately.
Let me paint the global semiconductor picture because people need to understand how big this is. Samsung broke $1 trillion market cap yesterday. Korea's Kospi index hit 7,000 for the first time in history. Advanced micro devices was up 15%. And Micron Technology, Micron, hit $792, up 6% on the day. I called that Micron trade from $373. I'm not going to pretend that doesn't feel good right now.
The Micron story is actually the most important data point in this entire rally, and not for the reason you'd expect.
Talk to me.
Micron formally exited the Chinese server chip market this week. The 23 ban is done, they're out. Samsung and SK Hynix absorbed that market. Micron just walked away from the world's second largest buyer.
And the stock was up 6% anyway.
6%. The United States artificial intelligence demand cycle absorbed the China loss without flinching. That is the data point. Not the gain, the reason behind it.
That tells you everything about how real this demand is right now. Then the Intel-NVIDIA thing dropped, and my jaw hit the floor.
NVIDIA invested actual capital in Intel alongside SoftBank, $7 billion total. Intel's 18 angstrom foundry gets positioned as a credible alternative to Taiwan Semiconductor.
And Intel, Litbu sold Altera for $4.3 billion and Mobileye for $900 million to fund the pivot. That is not a company selling assets to survive. That is a company burning the boats. All in on foundry.
The NVIDIA cosign is what makes it credible. When Jensen Huang puts actual dollars behind Intel's foundry, the market has to price it as a real second source option for artificial intelligence chip packaging. That changes the geopolitical calculation for anyone worried about Taiwan. If Taiwan Semiconductor goes offline for any reason, Intel's foundry isn't a backup plan anymore. It's the plan. And NVIDIA is already invested.
Intel just became a strategic asset. And then Oracle.
Oracle locked $65 billion in cloud commitments in 30 days. The Meta deal alone, $20 billion to train Llama models. That is one contract.
Those are purchase orders. Signed. The money is already spent. The servers have to get built.
This is contracted spend. The artificial intelligence infrastructure build-out is not hypothetical. Every chip in every data center has to come from somewhere. That is the demand that absorbed Micron losing China.
Samsung at $1 trillion. IMD up 15. Micron absorbing the China exit and going up anyway. Oracle at $65 billion in commitments. NVIDIA co-signing Intel Foundry. This is not one company having a good week. This is the entire global semiconductor complex moving together. That doesn't happen on vibes.
The CPI tieback is simple. Rates stay manageable. This cycle has years of runway. CPI forces the 10-year past 4.5%. Even the best chip names get repriced on the rate math. The referee decides.
Coinbase, ticker COIN, was up 7.6% yesterday. Bitcoin was down 1.1% the same session.
Those two things moving in opposite directions is the entire story in one line.
Money is not flowing into crypto. It's flowing into the company that operates the regulated infrastructure around it. That is a completely different trade.
Senate Banking Committee does the formal Clarity Act markup Thursday, May 14th. The market is front-running a world where digital assets have actual regulatory framework. Coinbase is the regulated exchange that benefits most from that outcome.
Stocked Up had Coinbase resistance pegged at 213 to 215. Coinbase is sitting at 2216 right now, breaking through that level. Thursday is your date.
Fair warning, though. Chasing a breakout at resistance, even with a real catalyst, is still a trade with risk. Know your position size. Know your exit before Thursday.
That's why I keep the smart guy around. All right. Week ahead. Fast round. Let's rip. Trump-Xi summit, Wednesday through Thursday. The Boeing chief executive is literally on the plane to China with Trump. Any tariff framework out of that meeting. China-American depository receipts and chip names get another leg immediately.
And if it falls apart, the tariff uncertainty that's been overhanging since April gets worse. Binary event with real stakes.
Cisco, Wednesday after hours. One sentence. I've got a small stub working in my system, and it has been carrying its weight ahead of the report.
Alibaba reports Wednesday pre-market. The timing relative to Trump-Xi is not a coincidence. Any guidance on China conditions is worth paying attention to.
And the one we're building toward all week. NVIDIA reports May 19th. Everything we covered today. Oracle's $65 billion. The Intel Foundry move. Samsung's market cap. Micron's demand red. It all gets stress tested when Jensen steps to the mic. That is next week's main event. We will be back for it.
Quick uranium note. Energy Fuels was down 5.64%. Centrus Energy, LEU, was up 1.73%. Same conflict, opposite moves within the sector.
System check. Fast. My TFT system is sitting about 75% cash right now. Holding Amazon and Broadcom, both underwater. Plus, that small Cisco stub that's actually working. Waiting for CPI to clarify direction before I add anything.
Wave Trader is running 9 open positions. Equity at $122,827, 75% win rate on the cycle. Qualcomm hit all three targets, 8.78% gain. Yesterday, the model reviewed 307 potential entries and took 6. VIX rate of change reading at 1.5. That's in the green zone to trade.
6 entries out of 307. That filter earns its keep.
Most of those 301 skip setups would have lost. The selectivity is the edge, not the picks.
Here's what we're watching. 10-year yield is the scoreboard today. 4.4% is stable. 4.5% is where the growth trade starts bleeding. Keep that number on your screen. Trump-Xi through Thursday. Any tariff headline moves China names fast. Coinbase through Thursday. Clarity Act. Markup is the live catalyst. Cisco after hours, Wednesday. And start building your read on NVIDIA, May 19th. That is the report that stress tests everything.
The market's been running on vibes and artificial intelligence dreams for 6 weeks. Today at 8:30, the math gets to talk.
Math talks first. We read it tomorrow. Session 39 is done. Keep your eyes on the 10-year and your conviction tighter than your stops. Later, trading family.